Hello, and welcome to our video about the 2008 financial crisis, the collapse of the world economy. In this video, we will explore how this crisis started, what happened, and how it affected the global economy. We'll also discuss the measures taken to prevent such a crisis from happening again in the future. So, let's get started. Part 1. How it all began. The 2008 financial crisis was triggered by the collapse of the housing market in the United States. In the early 2000s, the housing market experienced a boom, and many people invested in houses or took out mortgages to buy homes they couldn't afford. Banks took advantage of this boom and offered subprime loans to people with poor credit scores. These loans had adjustable interest rates and low initial payments, making them attractive to borrowers. As a result, many people took out loans they could not afford, and the housing bubble grew bigger and bigger. Part 2. The crisis hits. In 2006, the housing bubble burst, and housing prices plummeted. Many homeowners found themselves with mortgages worth more than their homes, leading to a wave of foreclosures. Banks and financial institutions that had invested in subprime loans and mortgage-backed securities suffered heavy losses. This, in turn, triggered a liquidity crisis, as banks became reluctant to lend money to each other. Part 3. The global impact. The crisis soon spread to other countries, as the global financial system is interconnected. Banks and financial institutions around the world had invested in subprime loans and mortgage-backed securities, and they too suffered significant losses. This led to a global recession that affected not only the United States but also Europe and Asia. Part 4. Preventive measures. Governments and central banks around the world took various measures to prevent such a crisis from happening again in the future. For example, the Dodd-Frank Wall Street Reform and Consumer Protection Act was passed in the United States in 2010 to regulate the financial industry and prevent future financial crises. Similarly, the Basel III framework was adopted by the international community to strengthen bank capital requirements and improve risk management. Conclusion. The 2008 financial crisis was a significant event that affected the world economy, and it all started with the collapse of the housing market in the United States. While it caused significant damage, it also led to important reforms to prevent such a crisis from happening again. We hope you found this video informative and interesting. Thank you for watching.